One of the most common mistakes new day traders make is they don't know how to manage profits. I mean, I've seen so many traders have this great winner, give back the gains, and even sometimes turn that winner into a loser. Today, I'm going to tell you how to fix that. Hey everyone, welcome back to StocksToTrade YouTube channel. I am lead trainer Tim Bohen. Be sure to subscribe, like these videos, share with your friends, and most importantly, ring that alert bell. I wanted you to be notified as soon as we drop a new video. We go live a lot, we post podcasts, how-to videos, trade recaps. There's a ton of information out there. I want you to be notified right away. And today I'm going to talk about some mentoring type things. And, if you're struggling with some of these concepts, how to manage some of these wild trades. I mean, literally the day I am recording, we're seeing multi-1,000% runners. We actually saw yesterday a 3,000% runner stock. But the thing is, today, it gave back almost all those gains. You need to know these techniques, and the best way to learn that is in the Steady Trade team. So hit that link below. Twice daily webinars every single day. I've done over 2,300 webinars to date. Check it out. It's the best way to rapidly learn this stuff. The market's never been wilder. Now is the time to get in. All right, that being said, today we're going to talk about the top 5 ways to manage your profits. And one of the best ways is having proper risk management. And not using too much leverage, not overextending yourself. I know it's tempting. Most US-based brokers will give you a minimum of 4% margin. A lot of them will give you 6, 8, 10. I've even seen higher margin levels, 10 times your money in margin in these offshore brokers. Insane amounts of leverage. And one of the biggest things you got to learn is leverage. At the end of the day, you're borrowing money to try and amplify your gains. But it's just like borrowing money in the real world. It can cut both ways. I read a tweet the other day and it was very interesting. And, people said, or the point was, if you had $300,000 in the bank, $300,000 in your bank account, would you go and buy a $300,000 house, take you to zero? Most people wouldn't. You'd be like, no, I'm not going to spend all my money on a house. Yet every single day, you'll see people with $30,000 or even $3,000 in the bank take a loan to buy a $300,000 house. And I'm not, we're not talking about housing here. I know housing can be a long-term investment, but just think about that for a second. Would you spend every dime you had on a house to pay cash? Most people say no. But then you'll take $3,000 and leverage it into $300,000 because you think, I got a good job. I can pay it over time. Trading with leverage is the same way. You're trying to amplify your gains quicker. You're trying to do too much too fast. And in my opinion, that's one of the biggest reasons so many people fail at this. And what you have to remember is it cuts both ways too, okay? If you're leveraged up, let's say 10 to 1, and you're in your green, that's awesome. So you catch $1 a share and now you're making, in essence, $10 a share, theoretically, because of the fact that you're levered up. Well, that's great if you win. But if that trade starts going against you, remember, margin cuts both ways. And yes, it can magnify your gains 10 times, but it can also massively crush your account if the stock goes against you. Just like back to that house analogy. It's great if the house keeps appreciating, but if you remember 2007, 2008, there were a lot of people that levered up buying multiple houses. We've all seen the stories of people buying, a $400,000 house, multiple $400,000 houses. And meanwhile, they were, working at the gambling table in Vegas, or they were a waitress or something. But the banks would lend the money. It cuts both ways. Now they're bankrupt. They lose all the houses. and they lose their credit rating. I mean, now they've had an abominable credit rating. So remember to be careful with leverage, especially if you're new, okay? If you're consistently profitable, you're winning a majority of the time. A lot of day traders are profitable with a 50% win rate. You don't have to win every day, but you want to be consistent and consistently profitable. That's how you make money on stocks like PECK. You can see another stock that's just went up 200% as I'm recording. All right, be careful with leverage. Next thing is don't go all in on a trade. And, this applies to you if you've got a cash account, which I think a cash account is a very solid idea. Check out some of our other videos, especially if you're long bias, if you're looking to buy stocks. And today, these days, that's the best strategy is look to go long stocks. Very dangerous to short out there. So if you've got that cash account, and let's say you've got $5,000 in your cash account, okay? Don't use all of your cash. 2 reasons. Number one, that probably means you're being too aggressive. And you can never, here's the thing. I talk about this in the Steady Trade team a lot. We have checklists. We want high conviction trades. Okay. We want to check as many boxes as possible. We want confidence in these trades. We're not just throwing stuff at the wall. But at the end of the day, anything can happen. News can come out. The president can tweet something. A world war could break out. There could be, a natural disaster. And if you're all in and something like that happens, it can go bad very, very quickly. And then the other thing that I think a lot of people don't consider is, what if there are 2 good setups the day? What if there's 3 good setups that day? If you're using all of your buying power, levered or not, in one play, you miss the other ones. You're handcuffed because all your buying power is tied up. And I just think the biggest point, back to what I said, I don't know if there's ever a perfect trade. I don't know if a perfect trade exists. And that being said, how could you ever go 100% in on one specific trade? I know you want to grow your account. I know you want to get over the PDT. I know you want to buy a Lamborghini, but you're also looking at this. This is something that I teach to be a long-term skill. To me, that's what trading is. It's a skilled trade. Whether you're a video editor, whether you're an electrician, whether you're a computer programmer, these are skills that you can apply over time to give yourself freedom, to buy a vacation, etc. We're not trying to hit a home run in this business. And if you're going all in, that's what you're doing. Third thing is always rule, this should have been probably the one I started with, but rule number 1 is keep your losses small and stick to your plan. That is just, when we hear about this high failure rate, okay, just like when I started the video with the introduction, so many people will get greedy and actually turn winners into losers. I've seen that so many times because they see a stock like SPI yesterday that went from $1 to 30 or 45 actually, and they expect every stock to go $1 to 45. And you can't have those kind of expectations. You can't try and hit home runs all the time because these stocks reverse quickly. You can see SPI, it's down to $16 today, $30 off of its highs. So if you're agile, you're in and out quickly, then you can make good money on these movers. Vice versa, if you're trading them without a stop, and let's say you bought SPI yesterday in the 40s. Today it's down to 16. You're crushed. You're destroyed. You're out of business. You can't do that. You have to have a plan. And then the biggest thing is you have to stick to it. And this is a delineation I make all the time. It's different if you're trading Apple or Microsoft or Berkshire Hathaway. Okay, if someone comes to me and says, well, hey, Apple's dipping a little bit and it kind of broke my plan and, I'm kind of bag holding a little bit, I'll always say, well, number 1, you should always just move on and stick to your plan. But I'll say I'll give you credit. At least you're bag holding Apple, okay? Odds are, look at the 20-year chart of Apple. You could have bag held that a few times and done all right. Now, if you're bag holding something like PECK, a stock that's gone from 3 to 11 and it's currently 10:45 a.m., You can't bag hold these stocks. You can't bag hold the SPIs, the Dries, the Kodaks, some of the biggest runners through the years, because they will destroy you over time. You have to stick to that stop. Conversely, have a good profit goal, a 3-to-1 risk to reward. And this is rule number 4. And, I've touched on it a couple times in this video. It's just, I see so many people that will say, okay, I'm going to risk 50 cents to make $1.50. And now they're up $2.50, $3 a share, and they're not taking profits. Greed, man. Fear and greed. Those are two things that will destroy you in trading. And greed is, obviously Gordon Gekko said greed is good. That's why these stocks move. I mean, one of the reasons we see moves like PEC, you can see the stock just keeps halting. Now it's up to 13, up 300% on the day, $9 a share. But greed is what drives these. But we, as a real trader, as a risk manager, because at the end of the day, your job is to manage risk. And you can't get greedy. Stick to your goals just like you stick to your stops. Now, listen, if your goal was to buy PEC on the dip and rip, which if you're familiar with the dip and rip, it's my favorite pattern. And guess what stock? Ooh, look at what PEC did at the open. Pulled back, a couple bucks, and then broke out on the day. That being said, if you're looking at that dip and rip, check out some of our other videos. But let's say you bought that high day break at 5, which is the area we look at a lot. And your goal was to risk 50 cents a share, and then so you would look at a 3-to-1 risk to reward, so you'd sell at $6.50. You can see the stock halted a couple times, blew through $6.50, skipped up to $8. Okay, that's a situation where you couldn't get out because of the halts anyway. Take those gains, okay? Don't, move on. You're above your goal. Take it. Cash that check. And then go back to your day job, go back to studying, go back to school, heck, go for a walk, get some fresh air, read a book. That is how you become consistently profitable over time, and that's how you're still in the game 15 years later like I am. Realistic expectations, sticking to your plan. Last thing I want to talk about is I think it's so valuable to have a mentor. Obviously, I talk about the StocksToTrade team all the time, and I think it's one of the best ways to learn this stuff. I've been doing this for over 15 years in the penny stock community, but I've been studying, and I tell this story all the time, and a lot of people will roll their eyes, but I remember being interested in stocks literally in elementary school. And I won't tell the story again, but I remember 4th grade waiting for Dad to bring home the newspaper in the 80s so that I could look at stock tickers. But so find someone that has this experience, that's willing and committed to your success. I mean, again, in 4 years, I've done over 2,300 webinars twice a day, every single day, never missed a day, never called in sick, never didn't show up, never was even late. Okay, I don't even show up late because I want the passion, the love that I have for this stuff, and I know the potential of trading. I mean, it can unlock your dreams. Now, you got to put in the work. You're not going to unlock your quote-unquote dreams in a day or a week, but in a year, couple years, especially if you have the right mentor. I mean, I started out with a mentor. Many of you are probably familiar with Tim Sykes. I started learning from Tim back in 2007. I like to think I was one of his first 5 or 10 students, me and Michael Good. You can see the story back 15 years ago almost now. And I think that one of the reasons things clicked so rapidly for me was because I had someone that at that point he'd already had 15 years of experience in this business, knew the ropes, was willing to teach it. So check out the StocksToTrade team. And man, even if, I would love to work with you, but find a mentor. Find someone that's seen these stocks like PEC or SPI or Pola or Kodak or Dries, or BPTH. There's so many of these stocks that have gone supernova in the last few years. You need to know how to recognize the patterns. You need to know how to run the scans, read the filings, interpret the news, etc. So that being said, everyone, please stick to your plans. Please have realistic expectations. Please take, all these precautions because, listen, trading is a lot like, flying a plane, okay? Listen, if you've taken flight school, if you've worked with a mentor, if you've practiced, put in the time in the simulator, all that, it's one thing. But if you just walk up, open a brokerage account, or jump in a plane, odds are things aren't going to end well. So have a great day, everyone, and let me know. Drop me a comment. Have you traded some of these wild movers? I mean, again, never seen anything like 2020. Drop me a comment and let me know, and we'll see you on the next video.